Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for April 25th, 2022. We are recording this at 1 p.m. Eastern time, and this is episode number 339. So today I've arranged for Harry Boxer to join us again. It's been a while since he's been here, so great to have him back. And my name is David Kosmeter. I'm the creator of Timing Research. And also with us is the option professor. He's going to moderate today. So I'm going to go ahead and turn it over to him.
Okay, we've got a very good show here today. I think everybody who's been here and listens to this is going to learn quite a bit because we've been very, very active in the markets, as you all know. And we've got Harry Boxer with us, who's got plenty of experience going through many different storms in the market over his career. And so it's going to be very, very valuable, in my view, to hear his input on what he sees happening and what he might be seeing happening coming up. So let's start out by introducing Harry to everybody who's not familiar. Harry, you've been around the business for many decades. Quick explanation of your background and what you're doing down at your company.
Well, the TWTR.com is a website for active day and swing traders. Several hundred people on it every day, and I give them trading advice. Every morning I come in and do my 2 hours of research and go pour over charts and news and take a look at what stocks may be setting up technically, because I am a technical analyst and I trade technically. Intraday 1 minute bars and on the swing trade 5 and 15-minute type bars and daily charts as well, of course. But you know, I'm not as big on the market itself as I am as an individual stocks. I'm a believer that it's a market of stocks, not a stock market. But at the same time, I constantly follow the S&P and NASDAQ 100 as well. I think the Dow is a joke, so I never follow that. But right. So for me, the S&P 500 is the leader. The NASDAQ 100 is from time to time. When I say leader, the NASDAQ 100 actually leads. The S&P 500 is much more broad-based and much more indicative of what may be going on in general, as opposed to the volatility where NDX shows much more of a beta in most of their market leaders, like your Apples and Googles and Microsofts and Amazons, et cetera.
And of course, it's got a lot of growth in the NASDAQ and also a lot of valuation changes in the NASDAQ where you can get extremely high valuations, much more than you would on the S&P.
That's for sure.
Yeah.
Yep.
Well, anyway, let's get into this stuff here because we're going to start out with just basic questions that we normally have, and they may not be appropriate for yourself, but let me ask anyway. The S&P opened today at around 4260 ballpark figure. And then a question normally we have on Mondays is, where do you think it might end on Friday? Well, up, down, sideways from the 4260.
Well, it depends what it does on Monday, Tuesday, Wednesday. But
yeah.
I'm a big believer. There's a big line of support in that 4,000 range, 4,100 zone.
Right.
If we don't hold that, that might. I think we can come down to 38.90 and even as low as 37.50.
Right. I
have a lot of institutional clients and friends of mine that are big traders that are looking for 38, 3,900.
Right.
And the market just doesn't accommodate the majority, and there's so many bearish people out there. I talk to everybody I know is bearish.
Right.
That I start to look at these charts and think, all right, well, maybe it's going to go much lower, but I think on a short-term basis, the market's overdone to the downside. Now, the McClellan oscillator today, was minus 155, and if you take a look at, let me take another look at it. Okay, on Thursday, it was as high as plus, this is an amazing reversal. It was plus 119.20 range. Today, it got down to minus 155. So that's a 270 point reversal in a couple of days. And that's huge. And it's
of course, yeah. Now, how does that compare to the February 24 low and the March whatever low?
Right, well, the February 24, the March was way less than that. The March, let's see, the March low was only minus 52, but the February low was minus 175, about where we were this morning, a little bit less. The big one though in January, we got down minus 274, and I've seen the index down even 300 and 400. But in the last few years, only once did we get below, say, minus 220. So we're getting to a point where in the next day or two we can see a very dramatic selling climax.
Turn around Tuesday, turn around Thursday, that kind of thing.
Right.
Yeah. And of course, we've got a lot of earnings coming out that could be helpful. And also we have some economic indicators that if they come out, could also buffer it, because everyone is really betting on the PCE to be terrible. And then maybe they're even thinking the GDP won't be very good. And those kind of numbers on Thursday and Friday could definitely give a boost in addition to the earnings coming out from those big companies, Microsoft, Google, whatever, right?
The only problem is that if the market, and this is a telltale sign, if the earnings are good or just, here's the thing, the market's not treating stocks very well if they're not beating substantially.
Right.
If they meet expectations, they're going down. If they're
Right.
low, they get killed.
Right.
And so if the market starts ignoring good news, that means they want to go lower. But I also think, and here's one thing that I think is missing, when I see a negative tick of 12, 13, 1400 at any one point, and I see it throw the baby out with the bathwater, 8, 10, 12 to 1 ratio of it declines over advances, that's, or 80 or 90%. That's when I want to see, but I'm not seeing it yet. And so I'm thinking we're getting close, but we may not be there. And it may be another day, 2, 3, before we actually plunge into those levels that would create. Now, I noticed this morning, I noted this morning that the NASDAQ 100 was down 22% at the low, something like that. And the S&P was down 12%. And I just don't see what I want to see. That doesn't mean they can't bounce and rally here, but is this the ultimate low? Maybe not. And also, even in the oscillator, if you take a look, it came down and bounced. It came down again. So we have a 3-wave move down. We may need a 4th wave bounce and a 5th wave climax. So I'm not quite sure yet if we're there, but we're starting to see signs of oversold short term.
Yeah. And the dividend advantage stocks had over bonds is out the window now as well. You used to have a huge yield advantage by buying stocks because the interest in the bank and the interest on T-bills was zero. That zero interest is out the window. Ergo, that big advantage of buying stocks for their dividends because you can't get a dividend out of treasuries. That's out the window a little bit too, huh?
Yeah, and if money wants to go into defensive areas like bonds or utilities and things like that, we're not seeing that either yet. What's really killing me, this market is getting whacked, and gold is rolling over, oil is rolling over.
Yeah.
By the way, the one thing I wanted to point out to the listeners, it's my experience, and I've been doing this over 50 years. It's my experience that when the strongest groups give way, that's near the end. And semiconductors and oils and uranium stock and all the precious metal stocks and even the agricultural input stocks like IPI and MOS and Nutrien and stocks like that, which were like going crazy in the midst of a lousy market.
CF industry,
CF's the other, There's 4 of them. Those are the 4 I follow. When those stocks start to cave, semiconductors have already been caving. Oil's coming down now, and oil stocks are getting hit. Then that's towards the tail end of every decline. That's why I'm optimistic about the possibilities of a short-term bounce. We'll see.
Would you say I've been a believer that the commodities are topping this year? Do you feel like that's a possibility? Because they really, really went up, and obviously the trees don't grow to the sky.
Yeah, the only problem is inflation and how that treats commodities. I'm not sure about that. I'm not an economist, but I follow charts, and I'm starting to see even gold rolled over, copper's coming down. And uranium, whatever, all these precious metals. Coal, by the way, coal stocks were another very strong group that got whacked. And even the shipping stocks, which were like out of control, those started to cave too. The leader in that group, Zim, has dropped about from like the mid 90s to the mid 60s in just a couple, 3 weeks. So that we're starting to see a lot of deterioration in the strongest groups, and that usually happens at the tail end.
Sure. Okay, well, as far as some of the stocks that you're looking, some of the ones that had been very hot. I mean, is there any bottom to any of these biotechs? Let's just talk about that real quick, because a lot of people are saying IBB was supposed, or XBI were supposed to be near a low. What do you think?
I put out a day trade, and I recently put out a swing trade on LABU. I think 185 to 10, 185 to 10 in 14 months. Mm-hmm. That is one of the biggest destructions I've ever seen in an index for any index. That goes to, if you look at, and I follow the SMH, I follow the FAS, and I follow the LABU. Those 3 tell me where the market's going. And if you take a look at the destruction, LABU was as high as 22 weeks ago. It's down to 10. It cut in half, but it's destroyed. And I think there's that biotechs, when they turn, and today this thing has gone from 10 to 11.15. Right now it's up 76 cents. And it looks like a complete reversal in the LABU. I put a day trade on it not too long ago and it was trading at 10.65. It's 11.15 now. I think that if that exhibits the kind of strength and the semiconductors turn, financials are, I think, have a problem here. But at the same point, I just really feel like there's the biotechs may be real steal down here. A lot of them. I look at a lot of individual biotechs that, and here's the problem, Jim. The real problem is that market doesn't tolerate companies that don't earn money.
No, that's out the window.
So there's a lot of biotechs that have a lot of promise and they have great drugs and all this other stuff, but they're not making any money yet.
Right.
And so, now they're looking for quality and they're looking for earnings, they're looking for dividends, whatever they're looking for, biotechs don't have it. And that's the problem. But I also think, the market will climb a wall of worry at some point where they're so washed out, they have to go higher.
Now, this LABU is a leveraged Direxon deal. Do you have any individual names for people who are looking in this area, but maybe don't want to deal in a leveraged product?
Well, yeah, I mean, there's also the BIB, like you said, which isn't as leveraged. It's just a regular, I think. It's the Pro Shares Ultra NASDAQ Biotechnology. I don't know if it's a double or a single, but that thing's down, for example, back in August or September last year, it traded up to 108 and it's trading at 56. It's not as bad, of course. 186 to 10 is destruction. This isn't as bad. And this is forming an inverse head and shoulders as well. So it's something to look at in terms of the BIB. I just got a feeling, and I may be wrong on this, that the biotechs are a place to look at. Now, there's a lot of individual biotech stocks in my group that I went over this weekend that are moving very well. Today, for example, Nakarta, NKTX, had a biotech, I think a drug approval.
Right.
It closed at 7 and change, and it traded up to 17. And the way it looks intraday, this could be 18 at 20 or even 22 before the day's over. And we're trading that. I put out a buy on that this morning at 10 3/4, and it made it up to 17.35, 17.56 the high. So
I see CRISP is up pretty good too, huh?
CRSP.
Uh-huh.
That's the CRISPR. Yeah, that's up pretty good. But it's only 2.5%. I mean, some of this, there's a lot of stocks that I trade on a day trade basis that are doing very, very well. Another one is Sunshine Biopharma, SBFM, up 21% today. And Veru, VERU, up 22%. And, there's just a lot of stocks we see every day that have those kind of pops.
So this kind of data that you have on your screen, this is something that you talk about and share in the room, huh?
Right, of course.
So that's a lot of value for people because, a lot of people wouldn't know these stocks unless they're brought to their attention. You know what I mean?
Totally, exactly. These are stocks I'm sure you've never heard of.
Right.
But
and I'm pretty familiar with a lot of stocks, but nobody's familiar with all of them.
No, but if you take a look at the pops and these three stocks I just gave you, 105% and two of them up 30 and 22%. There's a couple others that are up. A little company called Agritech Pharmaceuticals that's up 44% today. So I'd stay on top of what's moving. And,
yeah.
And
I mean, obviously, you put up this universe, and if the universe has a lot of green on it, that universe is something to keep an eye on.
Totally agree.
Yeah. With regards to those are pretty much all in the biotech area.
Those four were, but there's a lot of stocks that I'm trading today. A little company called Redbox, RDBX. It exploded this morning right at the opening at about 290, and I put out a little trade on it when I got over 3, and it got up to 415. That's a 35% trade. And another one, Sky Harbor, which is an aerospace, exploded, broke out, pulled back and formed a wedge. I looked at it, I said, this looks like a day trade too. I put it out at 815, it got up to 11.
Yeah, 2 out of the 3 on some of these websites that follow, activity of what people are talking about. 2 of them you already hit, NKTX and SKYH. Right. A weird one that hit that had a green number on it was Kohl's, KSS.
Well, that's because I think there's some activist stuff going on there and maybe even a takeover. And I also put out a day trade on Twitter. I really think that deal is going to get done. And now we're hearing the Wall Street Journal's reporting that maybe before or after the close today, there's going to be a $44 million, $1 billion bid to acquire Twitter by Musk, and that's going to be accepted.
And it's about $54 at that number?
I think so. 54.20 was the offer he made, but I'm not
Right.
sure what $44 billion equates to in terms of how many shares outstanding and what the per share offer is going to be. But that's the number we're hearing.
And so the universe that we're looking on the screen, those are the ones that basically are getting the most activity, the most momentum today. Is that pretty much the way to look at it?
Yeah, and I follow something. I'm a big proponent of TC2000 charting system, which
Uh-huh.
gives you an indicator nobody gives. Nobody has this indicator. It's proprietary. It's called volume buzz. It tells
Okay.
you at any time, any moment in the day, it averages out that moment of the day, believe it or not, via computer, what the percent gain of volume is, meaning how much more volume is it trading as a percentage of what it averaged out the last 100 days.
Right.
For example, NKTX has got 35,000% more volume than average.
Right.
And when you see that kind of volume and a stock thrusting, you need to pay attention to it.
Right. Is there a number you feel is a very, very strong number, like anything over 100, anything over 300 or percent?
In terms of what? Volume
Percent, no, percent volume, yeah.
Oh, yeah, it's got to be between 500 and 1,000% in my mind.
I got
Now,
you.
in other words, I want 5 to 10 times normal.
Right, okay, 5 to 10 times normal. That makes sense. Yeah, and there's more than a few of them out there, huh?
Right now, I'm looking at the top 4 are 39,000, 35,000. Then there's 2,800, 2,100, 2,000, 1,700. These are all 17 to 100 times normal.
Then after you yank the symbol down, because you love the volume and you love the green on it, you can also look into, is there news on the stock? And then you can go into what business they're in and all that kind of stuff too, a little bit, right?
Right, but I don't really, I know this is going to sound a little arrogant. I don't care what a company does.
Yeah,
Joe Granville once said to me many, many years ago, you'd be better off without a name on a chart, just a number. Just look at the chart. You saw the technicals. You didn't know what the company did. Because when you get enamored with what a company does,
Right.
you'll make the wrong decisions. Fundamentally, you'll make the wrong decisions. Because if you think a stock's going great, I'll give you a perfect example. Many years ago, when GoPro came out, and it was basically a one-trick pony, everyone got excited. Sales were going crazy. The stock went from like I think it opened at 20 or 30 and went up to 99 or 98. And I told everybody, put 100% stop on this stock at 90. And of course, it went down to single digits eventually. Because technically it was breaking down. Fundamentally, people were excited about the company, what they do with the product that they have. And the truth is just look at the charts. The charts will tell you what to do.
Yeah.
I've been doing this a long time, and I'm very accurate in calling turns up and down the stocks.
Now this is not just small caps on this board either. I see Netflix has got 2.5 times normal volume, and it's down today. Down the bottom there.
Yep.
And so basically this can give you both stuff that's going up or down.
Well,
and then
look at this chart. You see it?
Yeah, yeah.
It's about as bad as you can get. I will tell you one thing though, from 700 to 200, 500 points in about 5 months. This stock is imploded and it's extremely oversold. Can it go lower? Yeah. I wouldn't be picking a bottom. That expression, never catch a falling knife.
Right.
But because the bottom line is, there's no reason why it can't go lower. I'd rather buy stocks that have seen this pattern, turned around, and are now in a new uptrend. And I'd rather pay up and know that's going higher than try to guess where the bottom is going to be.
Now, you have the one formation that you like sometimes is where a market has had a rally, then it has a pullback, and then you're looking for that next rally to blow out that point and really get moving. Do you have any stocks that are kind of fitting into that kind of thing where, again, you've had a rally off of a low or something, and then you've had a pullback, and you're expecting that pullback to end, and then the next run up is going to be the one that really accelerates. Do you have any?
Here's an example. There's a company called Jumaya, which is supposed to be the Amazon of South Africa.
Uh-huh.
Now, this exploded through a declining top line, through the moving averages, and now it's come down to retest again. It's forming a massive base.
Yeah.
Today it reversed back up again from 722 to 825, and it's currently up about 8% on 4.4 million. Now I wouldn't buy this stock until it got up through 8 3/4, 9 through the resistance that I have right there.
Right.
Because then I think you can be 10, 12, 10, 11, 12, 14 up in that range. That's just one example. That's a current tech trader swing trade. I also want to show you, believe it or not, American Airlines. Check this out. Now, this stock has been in a downtrend. It formed a left shoulder, head, right shoulder, inverse head and shoulders. It had a breakaway gap. It blew through the moving averages. It went up to resistance and pulled back. I think it's a buy here. I don't know why the airlines look as good as they do, and I don't care.
Yeah, right.
I think American could be 23.5 and 26 short term. It's 1993 now. Now, it may not be the best trade, but I think it's a good swing trade.
Yeah. Can you throw up anything in the energy sector? Because I'm sure there's some people who are trying to figure out if that game is over or is it just pausing?
Yeah. One of my favorite stocks, and I first recommended an 8, 22, and 30 some odd, and it went up to 44. You can see this last 3 days in this chart has been terrible with big volume on the downside. Not huge, but big enough. And it's back to the trend line. So to me, any break, and it's below the 50. This stock hasn't closed below the 50 since back in December. And at that point, it went from 22 and change to 45, doubled. Now, in the long term, also, this is a 1, 2, 3, 4, 5 wave advance, so it may be over. When I look at Oxy, which is a favorite oil, major oil of mine, look at the breakdown in this chart.
Yeah.
It's coming down, and not only through a decline, to a support line, but all 3 moving averages are rolling over. And this stock is now below that. Now, it might bounce. If it bounces on low volume, it's a short because I think it's coming down. I think oil's coming down. I think Oxy could be back in the 40s again.
Yeah. I mean, the Fed, you've been around the block. The Fed's removing liquidity from the system. Things don't generally go through the roof during that environment. So it's not shocking that when I make a statement that it's possible commodities will top this year because 130 on the crude and the stock prices we've seen, it would not be shocking to find out later down the road that they might be the peaks. I mean, look at Archer Daniels Midland, ADM. I mean, that thing used to be, has gone up very, very high.
Of course. And then the other one is, we talked about the agricultural input stocks. Look, IPI and NTR and CF.
The nutrients, right?
All of them getting whacked. Now, they're coming down to the prior low, so maybe they get a bounce, but it looks like they're forming topping patterns.
Yeah. Which makes sense because they're withdrawing liquidity. This is an environment where they're trying to get things to come down, not go up.
Right. Well, I'm going to show you something that I've been high on this stock. We made a lot of money in my room from about 8 or 9 into that mid-20s, tripled our money. And I ignored it. But lately, and I've been talking to some people that are close to the company, but it's broken through the declining tops line through the 50-day moving average. It got up near resistance and backed off. It's done it on lower volume. This is a perfect setup for a stock that's going to 8, 9, 10, 11. It's currently at 713. I think short term, even in this market, no matter how bad, stock is going higher.
Hey, healthcare is a very defensive thing.
Right. Medical devices, right? This is a new.
My buddy just had his hip done. I'm sure there's people going to get their knee done. Medical devices, Stryker, things like that probably are pretty good.
How about this company called Seed? Origin Agritech. They apparently are doubling and tripling their revenue based on some major contracts they're getting from overseas. They make the genetically modified seeds, and China has just approved them. And when that happened, the stock went literally from 5 to 12. It's pulled back and it's got a perfect wedge on it. And you can see that if it gets through this quadruple top here near about 965, it's going to go vertical. This is only, I believe, 3 million shares floating on a stock. Very, very thin. But when it goes, it's wildfire. Look what happened back in here.
It looks great.
It really flies when it goes. I think, and I have.
You think that one might be going after that 1172? And if it takes out 1172, you could go a little parabolic above there.
I agree, and I've seen it go parabolic before. My targets are 14 and 18. Stock's trading 8 and change. I think this is a great swing trade for anybody right now. Seed and Zixi, Zynex, both of these look great.
Yeah. I picked up Newman Mining months ago at $54. It was paying 4% dividend. It was a no-brainer, but above 80, I thought it was time to take the money and run. What do you think of it now?
The whole gold group looks horrendous. Look at this break. When you have a big run up like that, a week ago it was looking like it was going to 100.
Exactly.
Okay, and then it just had a reversal off 86, straight down to 70. And quite frankly, right now, take a look what the prior low was. You're on support. If it breaks here, it's probably going to be 65, and it may be back to 59.
Yeah.
The whole group is breaking down.
Yeah, it was. You can see around 54, 55 was a good time to jump on the boat.
Even silver, look at Pan
Yeah,
American.
that's that was another one I thought looked good, but then once you broke under 30, that was it for that one too.
My favorite was AU for a long time. Look at that breakdown. I told everybody you're stopped at 22. Here it is at 20. And then the other one is GOLD Barrick.
Yeah.
They're all caving, rolling over.
How about Freeport FCX? That must be history by now.
Well, the same thing here, because this is
Yeah.
what I originally recommended this back here at 13.
Yeah, I got in at around 10 and I blew it out when it broke underneath the 45. I didn't like it. Yeah.
Well, we can see the breakdown here. The moving averages have rolled over.
Yeah.
It's taking out 2 layers of support. It's
Yeah.
actually taking out a 3rd layer of support. I'd be shorting this on a bounce to 45 if it got there.
And that's that feeds into the idea that the commodities might be topping this year.
Yeah, you're right. Exactly.
We talked about the oil. We talked about the gold and silver. What about agriculture? You showed the one seed that might be going up, but what about Mosaic, MOS?
Well, like I said, that's part of the same group of agricultural import stocks. That IPI,
Uh-huh.
NTR Nutrient, and CF. Is that what you said? No,
Yeah, yeah.
MOS. Yeah, they're all cracking. Now they're all back down to the 50, so they might bounce if we get a
Right.
market bounce. But I think they're all about to form head and shoulder tops or some sort of rounding tops. So I'd be careful. Look at the run they've had. I
Right.
mean, this has gone from under 7 to 80. And that's not even a big one. And NTR went up to 119 from 24. IPI, IPI, same thing. They all did that.
What about in the banks? You mentioned them, everyone thinks the banks are supposed to make more money because, and then of course the guy from B of A is saying the consumer is just fabulous and we're doing all kinds of business, but that's not the way Bank of America and stuff like that looks right now.
Well, look at this chart on the FAS.
Yeah.
It's a triple bull for financials.
Right.
1, 2, 3, 4. This is the 5th wave down, so we might get some support in there and a bounce. But I mean, I'd be concerned on a long-term basis if any chart looks like that individually, let alone an index. Same thing with the semiconductors. Look at the SMH rolling over. I mean, there's support across here. It's below it. Now, I'm not saying it can't bounce in here. It's had a 1, 2, 3, 4, 5 wave decline. So that's why I think the market could rally today.
I think a turnaround Tuesday makes a lot of sense. What about Nvidia? Because the whole world has been on that one.
Well, Nvidia was one of my favorite long-term picks and my biggest pick of the last half decade, because I'm going to show you something. When this stock broke out.
Yeah, it was great.
No, it was back here, that day, back in 2016.
Yeah.
It was in the low 20. No, this is split 2 for 1. It was 39. And now it's the equivalent, I think it was a 2 for 1 split of 600 something.
Right.
So, we had it, but look at this massive left shoulder, head, right shoulder type complex. And now it's dangerous looking to me. Now, again, it's rallying today, but it's not able to hold the rally. Let's take a little look at it. Yeah, well, we'll see.
There are a lot of people who could come out, but a lot of people have come out because you've gone from 350 down to 194, right?
Same thing with AMD, which went from 160 down to 80 something. It's in half. And then today, one of the major companies came out with a major upgrade in the buy, but for what reason? It's not technically left shoulder, head, right shoulder, kind of rounding top, head and shoulder top. It's broken. So I see nothing but negativity and rounding tops and head and shoulder tops in the semiconductors. The biotechs are ridiculous.
Well, let's just look at also 3 big ones real quick because this is the week where they're coming out. How does Google, Microsoft, and Apple look?
Terrible. And on my weekend webinar, see, I put out a weekend webinar every weekend. It's about an hour long. Where I go over all the NASDAQ 100 component, the NASDAQ 100 major components like the FANG stocks. I go over the indices, all the underlying technicals. I go over about 70 or 80 longs and about 30 or 40 shorts. And I went over this group. Look at Google in a moment. Take a look at this chart.
Yeah.
So we're in a long uptrend. All of a sudden, a massive left shoulder, head, right shoulder, or a rounding top, whatever you want to call it. But it's broken. It's at its lowest level since last June. It's almost a 52-week low for Google. Now today it's bound. Look where the bounce got to.
Right where the resistance is.
Right where resistance is.
Yeah.
So if it takes out today's low, this morning's low, which is what, 2360. I think we're headed to 2250, and below that, Katie bar the door. There's
Right.
not a lot of support. Maybe down near 2000.
Well, you were mentioning how, the bigger ones, the real strong ones, when they start breaking, it's near the end, if they can get these things down, we'd be closer to the end too.
Right. Well, they're certainly down, but I don't know if they've broken.
I'm saying, but when and if they do break, that would be more of a sign that capitulations occurred, right?
You would probably need like the kind of bottoming pattern you had here, where you get a real down spike like there,
Okay.
and then a big reversal bar.
Yeah.
You had another one there. This is a Microsoft.
Yeah.
In the case of Amazon, you'll see the big spike and big volume down here. We haven't gotten that kind of volume yet.
Right.
We haven't gotten to the throw the baby out with the bathwater mentality. There's a
Right.
double bottom support at 2665. I would love to see Amazon take that out and then reverse,
And that would tell you you're out of the woods.
probably.
What about Apple?
Until today, it held up very well. It was like
No, it really is. It's fantastic.
And even today, it turned right around. And where did it turn around? Check this out. If you look at where these lows were in here, this little spike high, the top of that bar, and here and there, right on it, and it reversed off of it. And today, if you look at the intraday chart on Apple, it seems to be leading the market higher. Not a spectacular chart, but I'll take it.
Yeah. Yeah. What about in the interest rate front? Because everyone whoever owns a bond, I mean, they're just getting whacked. TNX is the symbol for the 10-year actual yield. And of course, TLT is what that is. Yeah. So is there any calling off the dogs going to be happening, you think?
Well, it might be. Take a look. There's two lows in here, a couple lows in there, and we're all the way back down to retest those lows. So it's oversold because it's come down, even though it's come down in stair-step fashion. We've gone from 155 to 119.
Mm-hmm.
Doesn't sound like a lot necessarily, but it's a lot for a bond, index like that.
And it's also, yeah, because this is a fixed income. People are not looking to see fixed income go down 10, 15, 20% because they're only making 3% on the thing, right?
There you go. Exactly.
So, I mean, how long how much heat are you going to take when you're making 3, but you're losing 15 out the back door, and they don't mature for 20 years. So that means all that money is potentially not going to be coming to you for a while.
It's like dead money.
Yeah, exactly. Because that's the problem there. So that's pretty much the way the interest rate looks. Possibly it's hitting an exhaustive thing. We got the end of the month coming up. Sometimes I wonder if they like to, take the dogs off and make the statement not look like the monthly low. You know what I mean?
Yeah, exactly. But I'm not sure.
Yeah.
Well, I mean, yeah, it's likely to happen because we're so oversold.
Yeah. That's the same thing with the stocks. In other words, we got the end of the month coming up and we got these big guys coming out. If they want to make the statement look a little bit better than the monthly lows, this would be the week to turn it around a little bit.
Indeed.
So we'll have to see what happens there. Any other set? We went over biotech and we went over the medical devices. Those are looking pretty good. And these ones that people think are safe harbors, are they going to get whacked like utilities and staples? I know Coke had a big day today.
Well, it did because I think it was earnings.
Yeah.
It's even a stock like Keurig. What's the symbol for that?
I know. I can't remember. I know what you're talking about though.
Yeah,
The coffee maker and all that stuff. Yeah.
There it is, KDP.
Yeah.
Look at this chart. The work that's done is consolidate for 3 months. And so a lot of consumer product type companies are doing very, very well in its market defensively.
Yeah.
It always amazes me when I see utilities running, but we're seeing some of that too.
How about one that got thrown out, the baby with the bathwater a little bit, Starbucks, SBUX, that's consumer discretionary. I don't know, is there any?
And look at this pattern. So what we're saying, I want to point this out. The stock formed the left shoulder ahead and maybe a right shoulder, but the bottom line is a kind of roll over top. It broke support there and it broke support here. And at that point, big volume came in on the downside. So it was pretty obvious that the stock was a short or a sale at 105, and here it is 77. And yet this is what we're seeing, these kind of patterns. Let's go back. I want to show you something. This is where most of the stocks we're looking at right now are, right there. Google
Mm-hmm.
is right breaking down, and we just showed you Microsoft, and all of these stocks, if they don't hold here and they form these hopping patterns, could end up looking like SBUX. Slammed. I mean, if that happens, we're in a major bear market. If the market leaders crack like Starbucks cracked, I mean, look at General Motors. How
You
strong
know,
that-
on a macro view, another thing that I think, yeah, General, oh yeah, how's that? Yeah. Toyota looks not bad.
Which one?
Toyota, TM.
Well, it's not bad, but to
Could it
me,
be could it be giving you one of those 1, 2, 3 things that you like, where it had a pullback and maybe they'll take a run at 187, or you think that's too early to tell?
it is too early to tell. I'd have to see it take out last week's highs, which would be over 177.5. Then I would take a shot at this range right there.
Yeah.
187, but it's too early to tell. And I don't like the way this formation is formed. Now, if you take a look at and even I grant you it's not the same kind of stock, but look at Zixi, forms a V bottom, pulls back, breaks out and pulls back. It's more of a, and look at the volume coming in as it broke out there. So that's what I want to see, stocks that are doing that or consolidating or setting up nicely.
And on a percentage basis, obviously, it's a lot easier for this thing to give 20, 30, 40, 50%
Oh, yeah.
gain than the
Yeah.
other one. You know?
Yeah. Totally. And so many big, I'm a big proponent of leverage. I believe that I'd rather buy 10,000 shares of a stock at 8 or 10 than have to buy 1,000 shares of a stock at 80 or 100. That's just because I could peel off 1,000 at a time or a quarter of a position at a time. You can do the same thing with 1,000 shares, but it's 200 shares here, 300 shares there. I like the leverage in lower price stocks because they tend to move in bigger percentages, of course.
You do anything with the international stuff? I mean, Baba is down to like $80. I mean, can you do anything with something like that?
Well, I was looking at BILI. Do you know this company?
No.
Okay, they're electronic gaming and multimedia. But look what this stock. Look at that run.
Is it a U.S. company?
No, it's Chinese. So it went from 13 to 155, 157. It went up like ninefold.
Right.
Then it rolled over to 1, 2, 3, 4, and a big fifth wave down. So when I saw that blowout, and then the big volume reversal with the breakaway gap, and then it got up to resistance twice, it failed to pull back. The orderly pullback on low volume has me thinking, and now it's filled the gap too, that this stock might be ready right here.
What would be the numbers that would give you some feeling of warm and fuzzy on this? Anything above like $23?
Yeah, above 22.85 and then confirming 24.20. But once you get above this level there, then I think you're free to go.
Yeah, that does look good. Yeah, it has that thing where it pulled back and didn't take out the low. Obviously, the key is it doesn't take out the 1480, 1590 stuff.
A long way from there. And
Yeah.
another thing
What I'm
look
trying
at-
to say is, that's the idea. The idea is that it made a low, it had a rally, it pulled back, it didn't take out the low. And if it starts commencing to the upside, that's a train you jump on.
There's also one other thing to consider. See the big green bars?
Yeah.
When a stock goes up, it goes up on big volume. When it comes down on lower volume. Now,
Yeah.
and then to me, an indicator that it's being accumulated. And how do I know that? This is called the balance of power. And when it's green like that for 2 months, that means it's being accumulated. This is a TC 2000 indicator. So I think it's a perfect setup for a move back into the high 20s and maybe mid 30s.
These defense guys like Raytheon RTX, is there still legs in those, or are they going to start folding if a piece breaks out?
Yeah, exactly. But look at Raytheon. Do you think anybody cares? The stock in 3 days, we got 106 to 98. And
That's starting to smell like resolution in Ukraine, doesn't it?
yeah, but that's not going to happen.
Yeah.
I mean, unless somebody assassinates Putin.
Yeah. But I mean, something like that would probably happen before that happens. You know what I'm trying to say?
Oh, yeah.
These things will be turning well before you get it on the front page of the newspaper.
But they are rolling over, aren't they?
Yeah. So that's interesting, because that would probably be helpful for the market, at least a geopolitical positive. You know what I mean?
Yeah.
And
if there's ever, I'll tell you right now, the market will explode if there's any deal in the Ukraine.
With this kind of sentiment?
And with this setup, right?
Yeah, with this kind of setup. What about Facebook? That's coming up. Everybody's so negative on it. Thing used to be, they still got 3 billion eyeballs. Can't they make money on 3 billion eyeballs?
Yeah, but again, I look at technicals. This stock today is the lowest level on Facebook in 2 years. And based on that breakaway gap to the downside and that retracement, the rollover to a new low, even though it's nominal, it's important. It doesn't hold the zone right there. It could go down at 158.60.
Yeah.
And if a market breaks, that'll happen. But even if, see, I don't buy stocks in downtrends.
Yeah. There's nothing to grab. There's no strap hang. This is a Subway with no strap hanger, right?
There you go.
Yeah, I got you. Yeah. Any other stocks on your mind? I know there's a lot of them that you cover all the time. Any other ones? Because you've definitely hit some really good ones.
Well, I like.
What about housing? Because that's in the toilet. Is housing going to make a rebound? The builders, Lennar, I don't know, Pulte, any of these people?
It's possible. But you can see they're all in downtrend. So again, what point? I'd be interested in this over 76, but not down here at 72, because if I'm picking a bottom and it rolls over, it's going to 65. And why not? Look where this triple bottom is down here. That's where support is, 65. So I'm not anticipating, I don't anticipate lows anymore. I don't do that anymore. Okay. I want stocks that are turning around. Here's an interesting company that everybody loves called GitLab. We bought it when it first came out, and then I told everybody to get out, and it rolled over in a 5-wave decline. Suddenly climax, look at the volume on the upside, huge. And then it came down to 1, 2, 3-wave corrective and moved, and I put a buy on it right about 49. And within a week, it went up to 57 and then pulled back down to retest. And today, it's up 11%. Look at this intraday chart.
Mm-hmm.
Pop wedge, pop flag, and just keeps stair-stepping its way higher. That's a good-looking chart. Intraday and on the daily, it's got the V bottom with the platform that I love, or wedge or coil, whatever you want to call it. That's the kind of stock. If it should get over last week's high, above 57.5, I think 65 and 78 are targets.
Yeah, you had a 15 basis point move downward in yields on the 10-year. That's going to be helpful to tech. It's going to be helpful to probably the biotech and that kind of stuff as well. So, and then of course, if these numbers later in the week are not as scary and indicate a little bit of a turn, again, the bonds are way oversold as you showed, so they could rally, which means yields could back off further. And then all of this yield anxiety, which has really hit these valuations, particularly in tech and biotech, that could open the door for, a pretty good size, reasonable rally.
The only problem with a rally here, this is what I always tell my people. When the market rallies before it should, all it does is alleviate an oversold condition and creates an opportunity for the market to even go lower. Yeah. Until I see it throw the baby out with the bathwater decline, where I get a negative tick today, the negative tick was only 868. I want to see 12, 13, 1500.
That overdone rally on the S&P to 4631 is actually giving us the fuel of this drop, because all those people now are coming out, in addition to the people who held on and they're tired of that.
In addition to both of them getting margin calls.
Exactly. So that's pretty tough all the way around.
Right.
Let me just think. Because we did do a pretty good around the world here. I can't really think of anything else.
Perhaps we can take some questions from some of the listeners.
Okay, yeah, that'd be great. Okay, you have some up there? Are you reading, or do you want me to read them, or what do you think?
Well, I can't see anything, so you.
Oh, okay, hang on a second. Let's get them for you here. Okay, hey, Tesla. How about TSLA?
Well, I was telling all my people, you don't want Tesla below 960. Look at the low today, 960.06. And the reason I said that is just draw a line across this zone here, and then where it pulled back to. Well, in addition, the 50-day moving average is 937. So this is the zone of support. If it gets below that, my targets in Tesla are 890, 875.90 zone, which is the trend line, and then it plunges down to 7.5. I don't think that's going to happen, but money's coming out of it today, I hear, because he's spending $44 billion to take over Twitter. No, and they're not happy with that.
No, I don't think they like the distraction at all. What about Costco, COST?
Yeah, well, obviously, an insane stock. Look at this.
Yeah, exactly.
but based on the amount of money I spend there every year, I can see why. Okay, well, it just broke support in terms of lateral price support here, but it didn't break the 50. But I'll tell you what, if I'm in a stock that I see that looks like this, it's trending, it's above the moving averages, and suddenly it takes out lateral price support. And if it takes out the 50, a lot of room to drop down here. That's what worries me about a lot of these high price stocks. Here's one I put a short on. You should see my box of shorts list. I'm going to take a minute to go over this list. I just put out DAC because of this head and shoulder top. Look at that.
Mhm.
I think this could plunge. This is one of those shipping stocks. Carvana is something I put out when I saw this bear wedge at 148. I know 158. It's down to 79. It only took about 90 days. My favorite of the short of the year is Crocs. Look at this.
Oh, yeah.
As soon as I saw Crocs break its trend line, I put out a short 149, and it's made it down to 68, and it still looks like it's going lower.
Yeah.
But
And
look at that.
a lot of people are very big on that.
Right. Well, I don't know why. Other than nurses, I don't know who wears Crocs anymore. JP Morgan. Now, here's an example of some of those financial stocks that look terrible. Look at that massive top. And then it comes down hard on Viam. That's a key right there.
Right.
Forms a rising bear flag, fails at the 50-day moving average, and gets powdered again. Does it
Right.
again and pound it again. So it's a 1, 2, 3, 4, 5 wave decline, but it may not be over. So I think we can get down to that 112.15 zone. That would be a much better buy down there. But
Yeah.
I can go on and on with shorts, one after another. Here's a new one that I put out called Huntsman. Head and shoulder top broken and the bear flag forms. Well, today it gapped down. It's backed up a little bit, but there's so many ugly looking charts out there.
Yeah.
So my box of short list is strewn with them. This is one of my favorite ones of the year too. When it broke here,
Oh, yeah.
I put out a box of shorts at 545. Within 60 days, it was 168. 400 point short. How about that?
What about Generac? Did you get on the short side of that? Everyone was buying generators for a while, and then they stopped buying them.
Well, see, now here's the thing. I want to show you the pattern.
Yeah.
It's all-time high with a massive reversal bar right there at the high. See that reversal bar? Look at the volume that it picked up that day. It traded 1.9 million shares, a lot for that stock. And from there, it's all over. What I teach in my room is that when you are trading a stock intraday or not, and you get a massive new high with a massive reversal on major volume, that means sophisticated traders are getting out.
Right.
And look at this stock went from 524 in 3 months to 251 in half. Now it's already broken again. So I don't know where they're taking this, but this could be down to $150, $200. On a measure move basis, I can see it down here, 175. Do we have any questions?
Well, we got another one up here for QQQs. They'd like to just to get an idea. Is there an end to the rainstorm down here? I was kind of wondering if it was going to hold that 320 area,
Well,
310.
the clouds made part temporarily, put it that way. Here's what I'm looking at. God forbid they break this.
Yeah, that's what I'm thinking.
Okay.
This is the line in the sand. It has to hold.
What I'm thinking also is this. That's going to be a very, very, what I would call hard support, resistance, 348.
Yeah.
If you can get up there and the market rallies anywhere in that zone, and it does it on weak volume too, and the technical zone improve, we're going down and breaking down. And where we go down from here, whoa. I don't know if it's possible, but I'm telling you that the first target is
Well, if
about,
we're going to 3,700 on S&P, you'll probably see those numbers you're talking about.
that's 295 to 300.
Yeah.
Yeah, about 300 is my next target.
Cybersecurity, CIBR is the ETF on it. Everyone's pretty much the catch meow on that. Is that it looks kind of shaky too, doesn't it?
Yeah, it's under the 50, but here's what I do like, and I would say, if it's able to hold this rising channel, right there at support, if it's able to hold it there, then you got a shot at retesting the high. But
Yeah.
you also have a wall of resistance right there. It's going to be tough to get this one through 54.
And what about cloud, CLOU? That's another one that Now, could that be giving you the old pullback to the number and now we go after 2292 or no?
Here's the problem. The problem is when it pulls back, here's what I want to see. I want to see the stock go up there, consolidate above the moving averages as they cross over. Now, again, maybe not the best example, but ZYXI crosses up above the moving averages and it's been holding for a week and a half, 2 weeks above the moving averages.
Right.
As they moving averages cross over to the upside. That's a trend turner for me. So I highly recommend this stock to anybody who's interested, ZYXI. And I think seed, these two stocks in the next few weeks could be monsters. We'll see. I think it could be up 50 to 100% quickly. This one could be double. The seed is very volatile. You saw the way it moved here in February.
Oh, yeah.
It went from 533 to 12 and more than doubled in about 2 weeks. And I think it's going to do it again.
Looks like it's going. Hey, we're going to be running out of time here. And there's some people saying they are dying for more interaction with the speaker. Well, the whole idea is that's why you have the trading room. So let's explain how all these people who would love to interact with you can actually get over there and start getting this information on a daily basis.
Well, number one, I want to show you something. This is my trading room right now. You can see all these comments being made. This goes on all day where I give out buy alerts and all the people on my site, very accomplished traders, are talking about how stocks are setting up, something's perky, something's breaking out. And I have only so many eyes to watch so many stocks, but these people are on top of things. And if there's something moving in the market, we're seeing it. We're seeing it, you know. What I would suggest you do is go to the TWTR.com. Hang on a moment. The TWTR.com. And I'm trying to get to the main site there.
So it's thetechtrader.com. And then what do we do?
Well, I mean, you should be, I don't know what you go.
No, we have the website up there, right there. So the link is right in front of them. But once they get to the website, what do they do to try to
there's a button in the middle that says log in or sign up and just put in your information. By the way, folks, I have a free 10-day trial. All the services I provide, day trades, swing trades, the trading room, you name it, you can participate in. And most people tell me they make enough money in the free 2-week trial to pay for the first couple of years. It's only $239 a month, $139 if you're just a swing trader. That's more of a limited service. You won't have the trading room. And my webinars all day, all I do is come up the live webinar where you can see me going through my charts. You see what the patterns, how the patterns are developing. I may draw my lines like this and show you the intraday trends. And then I'll talk to you about where support resistance is. For example, resistance is right there. Targets are there and there, that type of thing. And so I have, like an NKTX this morning, I came in and I showed everybody the chart pre-market. It gapped, it consolidated.
And then jam.
And then see that? See, when I see a stock that gaps, runs, pulls back and consolidates in a wedge and then breaks out, this is where we went long, right here at 1135.45 range. And it made it up to 1756. What a nice day trade that was. And it's still working. It's not dead yet. Has to hold that support though.
Right.
And this dotted line is a VWAP. But most importantly, you come into the site, enjoy the site for 2 weeks for free. No credit card necessary. But I'm not sure if they changed that or not. I may be misspeaking. The bottom line is you won't be charged until the 2 weeks are up, and it's up to you whether you want to continue as a full-time subscriber. But I invite everybody to come join us, have some fun, make some money. Sure. And it is a place with some really sharp traders who will mentor you if you are trying to learn a little bit, and they don't mind you asking questions. And you know that's the one thing about our room, that it's a very friendly site. Anybody who's got an attitude or speaks negatively about somebody is asked to leave. That's just the way I like to keep things.
And no politics.
Oh my God! If there's by the way, if there's a political post, I delete it immediately.
We don't need politics and money here.
No, and not even Enoch. I'm a big Yankee fan, but I don't talk about baseball either.
Don't talk about baseball either. All right. Well, Harry, it's always fantastic to have you here. And again, everyone should definitely jump on this and take advantage of it, especially with the a 10-day free look to see if it'd be appropriate for their circumstances. Of course, after that period of time, they'd have a pretty good idea. And basically, so go over to Harry's site and make sure you get that going. As far as Option Professor is concerned, we do have a PDF reports on hedging downside risk and upside surprises using the options. And in this market, it has been tailor-made to be aware of how to use that. That's for sure. So that's optionprofessor.com. Put your information in and we'll get information about that PDF report. Harry, again, thank you very much for being here. You're fantastic. And we'll see you again, hopefully not too soon, not too far out in the future. And so thanks a lot for being here.
Love being here. Thanks for inviting me and look forward to the next time. Bye-bye.
Okay, bye. David, back to you. And thanks a lot for having us get this together. This is a good one.
All right, thanks guys. Yeah, a ton of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast apps. You can get instant updates when I post new episodes. Also, if you just go to TimingResearch.com, you can get access to this episode as soon as I get it posted, as well as any of the past episodes or presentations. If you did not see this, we had a huge event last week, the Tech Wizards event. So we had 31 good presentations on software indicators, algorithms, and tools and platforms. So if you haven't had a chance to check that out, they're all there to watch anytime you want. So sure to check that out. Also, just want to thank my guests again for today, Harry Boxer of TheTechTrader.com. Great to have him back. And the Option Professor of OptionProfessor.com. Thanks, everyone.